All right, today we're going to take a look at analyzing transactions for Amanda's campus delivery using a template of analyzing transaction sheets that's on Excel. So here we have the chart of accounts up in the left-hand corner, and of course we have our assets, our liabilities, our owner's equity, revenues, and expenses, all listed correctly on the chart of accounts. And then down and to the right, we have the actual transactions. It tells us the date and what happened and the amount. And so we're going to go through and put these on the Excel analyzing transaction sheets. So here's a copy of the analyzing transaction sheets. I have gone directly to analyzing transactions part 2 sheets, which are the ones that include debits and credits. The part 1 sheets does not include yet debit or credit. So it's an initial sheet you can use, but then you have to add your debits and credits later. So we've gone directly to using part 2 here. Now each question is on here. Here's a what happened, which accounts are we going to use, and how is the equation affected, which includes, when you have debits and credits, 3 questions, sub-questions. Do we have an increase or decrease of each account? And do we have a debit or a credit of each account? And finally, do our total debits equal our total credits, yes or no? Okay, and that goes there. So many of these things have a drop-down arrow box. And so what happened, our give up, once I click on there, has a drop-down arrow box. And you can choose amongst those things as to whatever it is we're giving up. Again, same thing for whatever we're receiving. Now, because every company has their own chart of accounts, there are no choices there. So you have to actually choose an account name from the chart of accounts that you're using. But the kind of account that has a drop down, assets, liabilities, etc., whether or not it has an increase or decrease. And when you get to debit or credit, there's no drop down there either. So you'll have to type in either DR or CR. And then finally, you'll come down here. How is the equation affected? And again, there is no drop down. You just choose yes or no. Of course, if your answer is no, that the debits don't equal your credits, then your accounting equation doesn't balance, and you have a mistake. You need to find it before you go on. So this Excel template gives you 1, 2, 3, 4, 5, 6, 7, 8 different sections, 8 different transactions that can be analyzed. And here we have analyzing sheets part 1, part 2, and part 3. So basically you can do 24 transactions on this one set of analyzing sheets. And of course, all you need to do if you need more is to copy some more onto other sheets. Okay, so let's go ahead and get started on Amanda's campus delivery. We take a look at this first transaction. Amanda Adams invested in a business, 2,000. Okay, and so what happened? Of course, we're looking from the eyes of the business, and when you're talking about something that relates to the owner, whether it's owner investment or owner withdrawal, get the cash part first. Did the business receive or give up cash? Well, in this case, the business received cash. Okay, once you have the cash in the correct box, then the other box you're going to use either owner investment or owner withdrawal. In this case, it's an owner investment. Okay, so that would go in the give up box. So get the cash into the correct box first, and then your owner investment or owner withdrawal will go into the other box. That's how to deal with the owner related ones. All right, which accounts? Now when we choose our accounts, we're going to choose an account for the receive, which is cash. So I'm going to, in the receive section, I'm going to put the account that I'm going to use for cash. So once again, I go to the chart of accounts. I look for an account that's appropriate for cash. Well, there's an account called cash. So that's the one we're going to use. Okay, so we're going to use, but I have to type it in, cash. Then for the give up, I look at what did I give up? Owner investment. So I look the chart of accounts for an account that goes with owner investments. And we know from previous PowerPoints that that would be the capital account. So AA, comma, capital. All right, so now we have our two account names in, and we need to put the kinds of accounts, whether there's increase or decrease or debit or credit. Okay, and so let's start with the cash. Cash is always a little bit easier to deal with. What kind of account is cash? Well, the business owns the cash, so it would be an asset. Do we have more or less cash than we did 5 minutes ago? Well, the business has more cash than it did 5 minutes ago, so that's an increase. Finally, we have an increase in an asset. Is that a debit or credit? Well, of course, we know from our table that you're supposed to have memorized that an increase is a debit for A, W, and E. This is an A, an asset, and we do have an increase, so that's going to be a debit, so I'll put in DR. Now I go to the capital account. What kind of account is this? This is an owner equity account. However, we have to specify, because owner equity accounts, as we know, can have 4 different subtypes. It can be an owner investment, owner withdrawal, a revenue, or an expense. And so since we have these subtypes, we have to say, well, which subtype is it? For capital, we're talking about owner investment. Okay? Do we have more or less owner investment than we did 5 minutes ago? Well, 5 minutes ago there was no owner investment, and now we do have one. So that is an increase. Do we have a debit or credit? We have an increase in an owner investment. And so we learned from our table you're supposed to have memorized that an increase is a credit for L, I, and R. This is an I, an owner investment. We do have an increase, so that will be a credit. Okay, so we have 1 debit and 1 credit. So do our debits equal our credits? Yes, we have 1 of each. So we put in yes, and we're good to go for that first transaction. Okay. All right, so let's take a look at the second transaction. We bought delivery equipment for cash. Okay, so here we have what did we give up? We gave up cash. And what did we receive? We received delivery equipment. Okay, now when you're putting that in there, in the drop-down box, there is no delivery equipment. So we need to look for something that just says like equipment, just plain equipment. Okay, now when we use the chart of accounts, we'll put in an exact account name. But for the what happened, we're just looking for a simple, in English, what did we give up, what did we receive? That is what the business gave up and received. All right, so now we need to look in the chart of accounts. I need for the receive, I need some kind of delivery equipment account, and for the give up, I need some account that goes with cash. So when I look at my chart of accounts, I do have a delivery equipment account and I have a cash account. So that makes it easy. So the give up is cash, and what we received, the account name we're going to use is delivery equipment. Okay, cash is an asset. Delivery equipment is an asset. We paid cash out for the equipment, so we now have less cash. We have a decrease in our cash. Whenever I have a decrease in an asset, it's opposite of increase, and so that would be opposite of debit, which is credit. Now for the delivery equipment, we receive that. Do we have more or less of it than we had 5 minutes ago? We have more of it, so we have an increase in an asset, and that is a debit. I have one debit and one credit, so do my debits equal my credits? Yes, they do. And I'm done with that transaction. Okay, we'll go through one more. Bought delivery equipment on account. Okay, and so here we have what did we receive. Again, we received equipment, but this time we did not give out cash. We gave up the fact that we owe out to a vendor. We have this obligation now sitting on our shoulders. That's what we're giving up. We will give up cash in the future, but right now, today, we owe out to vendor. That's what we're giving up. So for the receive for equipment, we know we have an account called delivery equipment. So I put that in there. For owe out to vendor, whenever you owe out to vendor, we have an account called accounts payable on the chart of accounts, and that goes to owe out to vendor. For delivery equipment, we own it. That's an asset. We have more of it than we had 5 minutes ago. 5 minutes ago, we had one piece of equipment. Now we have more, okay? And so we have an increase. An increase in an asset is a debit. For accounts payable, that's where we owe out to vendors. That's a liability, okay? Do we owe out more or less to the vendor than we did 5 minutes ago? Well, 5 minutes ago, we didn't owe anything to a vendor. Now we do. So that is an increase. We have an increase in a liability. So that is a credit. Do my debits equal my credits? Yes, they do. So I'm done with that transaction. Okay, so we'll stop here.